Hello, and welcome back to Cardano Coin, where we bring you the most recent and intriguing ADA news. We're giving away 1,000 ADA to those who are watching. All you have to do is upvote, subscribe, leave a comment, and watch the video to the end to be eligible. The winners will be picked next week and publicized on the community page of the channel. Meet Charles Hoskinson, co-creator of Ethereum and founder of the Cardano blockchain technology, who speaks out on the current cryptocurrency meltdown. How was the crypto meltdown playing out? Is there any ray of hope that the crash's consequences compelled Hoskinson to voice his thoughts? What was his opinion on the crash? So, when, if ever, will crypto, particularly Cardano, recover? Stay tuned for all suitable solutions to these queries in this video. The worldwide crypto market cap has decreased, with $200 billion in value wiped in only 24 hours last month, while Bitcoin, which accounts for around 44% of the crypto market, has dropped to a 90-day low. According to CoinMarketCap, this following has been a disaster for cryptocurrencies. Cardano, XRP, and Solana are among the top 10 tokens under attack. According to a recent study, these three tokens have dropped 11.5%, 9.4%, and 13.4%, respectively. The crypto market's strong downward movement follows significant selling pressure in other risk assets such as stocks, although the link between equities and crypto is likely owing to a version of the same macro dynamics that drove risk assets higher in recent times. Now there's a throng headed towards the exits. Cryptocurrencies like Cardano, XRP, and Solana provide a better risk-reward ratio. This is something that investors are not seeking for right now, especially with the recent demise of the algorithmic stablecoin ecosystem Terra. Luna, the Terra blockchain asset, has lately dropped from roughly $80 per token to around 1 cent in the last week. This is due to the tariff stablecoin Terra USD deviating off its peg. The US dollar is currently trading below 40 cents per token, which is intended to be tied to the $1 level. This has proven to be a tremendous epidemic since many investors did not consider the crypto sector into their valuation models. Despite the fact that some analysts have advised investors to maintain the path, others have called the catastrophe a watershed moment or the end of days. According to a new report by Bank of America, it was the worst implosion since May 2001, and that it compares to the 2008 financial crisis, the dot-com crash, and the 2000 recent events not only taught investors to invest cautiously, but also busted many myths surrounding the cryptocurrency market, which crashed and burned this week. The issue that is occupying the minds of many investors is, how did this happen? It is safe to say that there is no straightforward solution, although a number of things acting in concert may be default. Rising inflation, interest rate rises, and geopolitical turmoil brought on by the Ukraine crisis may share some of the responsibility. This week, Bank of America's global crypto and digital asset strategist Arkash revealed to Fortune. In April, the aforementioned variables successfully produced severe headwinds for Bitcoin as consumer prices climbed more slowly than the previous month. But we're still enthralled. Economists expected the Fed to raise interest rates by 0.5 percentage point this month, the first time in 22 years, and Russia has showed no signs of relenting in its invasion of Ukraine. Another aspect is the link of cryptocurrency to the stock market, which has lately fallen. Bitcoin, according to Bank of America and experts, acts more like a hazardous asset. Bitcoin has substantially less in common with gold, the most well-known store of value, than it does with the S&P wink with tongue sticking out 500 and the IT heavyweights. The Nasdaq tech stocks had a rough start to the week, with the Nasdaq falling 4% on Monday, then another 3% on Wednesday before recovering some ground on Friday afternoon. This week, the Dow plummeted more than 2%, the S&P wink with tongue sticking out 500 fell 2.5%, and the Nasdaq fell 3%. In the midst of this uproar, 34-year-old Charles Hoskinson, the inventor of the Cardano blockchain, has stepped forward to address the matter. Don't forget about Hoskinson. He is a serial entrepreneur who became interested in cryptocurrencies during Bitcoin Cardano's early days. Hoskinson describes to it as a third-generation blockchain network, and it is the product of a proposal from IOHK clients who desired a Japanese version of Ethereum. Have you watched his most recent video update and Twitter broadcasts, which were both posted on Tuesday? He began by referring to recent occurrences as hilarious market and industrial developments, claiming that the globe is working in an unhealthy economy. He predicted a dismal future brought on by inflation and the government's constant creation of money. The continuing crypto meltdown, in which the overall market value has dropped 19% according to CoinMarketCap, the divide between institutional and individual investors has been highlighted. According to the letter and Hoskinson's point of view, crypto is being used to opt out of an unjust global system. Institutions have started selling their crypto holdings, mostly because they see it as a high-risk, high-reward asset. Hoskinson stated that there was always the risk of luring Wall Street types in because of financial methods and excessive inflation. He went on to say that they had already picked their fate. They're playing musical chairs with the global economy, which is doomed to fail because it can't maintain itself. The manipulation of cryptocurrencies is unsettling markets and driving down prices, not cryptocurrencies themselves. He claims that the entire purpose of cryptocurrencies is to restore confidence, credibility, and stability to the global financial system. Charles Hoskinson discusses that significant corrections are common in the crypto business and that the recent market meltdown is exaggerated. Furthermore, Hoskinson claims that seasoned investors are unconcerned by the current rapid market decline since they have seen a comparable size correction in the past, but inexperienced investors are panicking. I've worked in this industry for about a decade, and I remember Bitcoin being $1, then going up to $30, then down to $4, then to $50, then to $1,200, then to $50, then up to $20,000, then down to $4,000, then $64,000. And no matter where I go or what I do, the steady rhythm of the altitude never ceases to astonish me. So nothing phases the old guard any longer. We went through everything twice to make sure we didn't overlook anything. The new individuals, the minute anything happens, such as the collapse of a stable coin or the collapse of BitConnect or similar events, they proclaim, "Oh my God, this is the end of cryptography, everything is over. We're all going to die. The markets have peaked, and the dream has come to an end." Hoskinson then welcomes newbies to the newest crypto winter, predicting that it would take weeks to months for the sector to bottom out before slowly rebounding up for Hoskinson. The recent USD and Luna meltdown may have been a gift in disguise. According to reports, he was able to repay the favor for a previous tweet sent by the developer of the two currencies Dogecoin just over a month ago. Dogecoin inquired whether he should purchase some ADA to take advantage of the negative correlation signaling that the share price of Cardano is declining while the value of Luna is growing. Hoskinson reacted quickly now that Luna has lost 95% of its value in a week and there is no longer a doubt about the Terra USD stablecoin's $1 peg. It was now his turn to inquire whether it was worthwhile to get some Luna due to the unfavorable association. Is it possible that Hoskinson or Cardano will be the first to recover? Will Cardano, according to Hoskinson, create a more balanced and sustainable ecology for cryptocurrencies? ADA, on the other hand, is the only currency with a scientific perspective and a research-driven approach, according to his website. In practice, this means that open-source blockchain is subjected to a rigorous review process by academic scientists and programmers. ADA bills itself as the first third-generation cryptocurrency, aiming to address scaling and infrastructure issues that initially surfaced in Bitcoin, the first-generation cryptocurrency that pioneered the concept of digital currencies, and Ethereum, the second-generation cryptocurrency that extended coin use cases to smart contracts. Cardano's specific goal is to tackle scalability, interoperability, and sustainability issues in all cryptocurrency systems. It also aims to enable cross-chain transfers via side chains, which conduct transactions between two parties off the chain. It is also looking into ways for institutions and individuals to selectively reveal metadata related to transactions and identities in order to enable the use of cryptocurrencies for trading and daily transactions. Regardless of these intriguing characteristics, it is reasonable to infer that Cardano has little possibility of competing with other cryptocurrencies, at least for the time being, due to a number of constraints. So, will cryptocurrency recover? The news has prompted the question of whether the market has reached the expected cooling-off period and whether the price of Bitcoin will continue to decrease owing to the UST situation and poor technical mood. Still, if U.S. inflation continues to fall, the macroeconomic climate will certainly improve and prices will bottom out. So, while the future appears uncertain at the moment, can we rely on Hoskinson's pledge that a recovery will occur soon? Let us know what you think in the comments area below. Also, make certain that you hit the subscribe and bell buttons.